Hey, welcome back to the Art of SBA Lending. We have episode 3 of the St. Louis series today. Our guest, Lizzie Slaton. Lizzie is credit manager at Dogwood State Bank. Dogwood is a top 50 SBA 7A lender in the country. Lizzie is their fairly new appointed credit manager. She's been in the role just under a year. And, we've been wanting to have more and more credit folks come on the podcast and talk about what it's like working with BDOs and their credit philosophy and things like that. So we were really excited to have her on. We talked about her background coming from portfolio management into underwriting to now credit manager, as well as different credit philosophies that she has. And my favorite, we talked about our pet peeves. And I hope you enjoy it. Stick around. Without further ado, let's get into it. So if you've been listening to this podcast for a while, you've probably heard me ask countless SBA leaders about the biggest challenges that their shops face. And there's one answer that's been given over and over again, and that is we can't find enough SBA talent. And when we do find them, we can't afford them because the salaries have skyrocketed. Somewhere along the lines, banks cut their training programs, fewer people were able to enter the industry, and folks started aging out. And now our industry is facing a talent crisis. And at the same time, our industry is growing. New shops are popping up every day, and there's just not enough people to go around. Now more than ever, we need an injection of new talent, not just to process the loans, but to pull our industry forward into the future with fresh ideas. This is why Shatterbox was created. Shatterbox is resurrecting the apprenticeship to solve the talent gap in SBA lending. Shatterbox is an in-depth 12-month apprenticeship where new SBA talent can absorb the skills needed to be proficient in our business with one-on-one interaction, Fortune 100 level e-learning at their fingertips, and a roundtable of SBA experts on standby to provide technical assistance. If you'd like to participate, visit shatterbox.io and sign up to receive more information. It kicks off this fall and space is limited. I'll leave a link in the show notes. Now on with the show. Lizzie Slaton, thanks for coming to the podcast.
Thanks for having me.
I just want to start with your background. Tell us where you came from.
Okay, so I've been in SBA since 2015, started on the servicing side and moved on from servicing to underwriting, and now I'm a credit manager.
Servicing, underwriting. I like how succinct it was. Way more succinct than you explaining your name. But
yeah.
Which,
it's a little easier than explaining the name.
And not everyone's going to get that, but we'll just roll with it. So when you say servicing, did you do anything in like portfolio management?
Yes. So that's how I actually got into SBA lending. I was a portfolio manager / servicing officer. And I knew nothing about SBA. First day on the job, I remember sitting down and one of my coworkers at the time mentioned something about the SOP, and I look at him, I'm like, what is that? And he pulls out the actual SOP, this thick, lays it on my desk. And I thought, I want to go home. I don't want to do this anymore. I need to get out of this job. No. Yeah, I had zero idea what it was.
But did you deal with any portfolio issues? Like, did you learn anything by anything that you saw in
Yes, I will say I think that starting in servicing really helped develop like my credit background because you get to see, I feel like sales and underwriting and closing is very transactional. The deal closes, you're on to your next. But I feel like, with servicing, you get to actually see successes, but then you see the failures. And then with the failures, you see, all right, what mistakes were made? Could they have been prevented? Sometimes they can't be prevented. Sometimes they can. So I feel like having that servicing background really helps your credit background because you're kind of thinking, I've seen deals that have gone bad, and I've seen what that can do not only to the bank, but also to the borrower. So that kind of helps when you're kind of looking at a new deal thinking, oh, okay, I've seen this before, or, here, what are ways to mitigate, things of that nature. So I do really, I've always told people, I'm like, having a servicing background, I really do think benefits a lot of underwriters that started in servicing.
Yeah, because I think about this a lot actually because, some deals are going to go bad. And then I always wonder, like, is an autopsy done on those deals to try to figure out what is?
Yes, you dig in. That's the first thing when a deal at least on my end, when a deal would go bad, the first thing you want to do is you pull up the original credit memo and I mean, it's no one's fault. You can't control if a deal goes bad, but it's going through and thinking, was there any way for me or the underwriter at the time to have prevented this? Most of the time, there's no way to prevent it. It's SBA lending. But you can learn things. You learn, maybe it was the industry, or maybe it was the buyer wasn't a right fit for the business. Maybe it just wasn't a good business to begin with. But I do think it helps you kind of learn in the end ways to kind of measure risk going forward.
So how did you actually get into SBA and get into that portfolio manager position?
I got lucky. So I was working, I was living in Alabama at the time, and I was working for a bank, just doing business banking underwriting. So no SBA lending. And I was kind of ready for a change. So I thought, let me move to Charlotte, North Carolina. So I just went through, started applying to a million different jobs. And the SBA portfolio management job was one of them. Had the interview, went well, got offered the job. Went to tell my boss at the time back in Alabama that I was taking a job in SBA lending. And he told me I would never have taken a job in SBA lending. And here we are today.
Wow. And, I would disagree.
I know. I love it now.
It's the best. Were you always kind of credit, or did you ever have any sort of exposure to anything sales related?
I've never had exposure to sales other than just talking with BDOs all the time.
Okay.
Yeah. So it's really just been the servicing and then the credit.
I think the portfolio management, hearing you say it, is probably a great way into the industry because it's one of those harder roles to fill. It's not that glamorous.
It's hard. It's very hard. You're dealing with a lot. Every day is a completely new day. Things are getting thrown at you left and right. But yeah, I honestly, like when I talk with people, I'm like, I think starting off in like a servicing portfolio management role is, like you said, a great way to really understand SBA lending just in general.
So when you were underwriting, let's move into the underwriting part now.
Okay.
When you're underwriting, you're speaking to the borrowers, right?
Yes. Yeah. We have, for every deal, we have a borrower call. Typically for me, when I do it, I like to kind of dig in deep first, get all my questions ready to go. And I like to have the call towards the end. So I pretty much know at the end, okay, give me 24 hours. I'll have this wrapped up, ready to go. But yeah, we have a borrower call for every deal.
Is it just about getting the information, or are you actually assessing your interaction with the customer, and does that play in?
I think it's both. I think, sometimes you can read so much through a business plan, but once you actually start talking with someone and asking some hard questions, you really get to kind of understand. Think for BizAx, one of the questions I always ask is, what is the due diligence you've done on your end? So, as a lender, we do a bunch of, due diligence. We're going through the tax returns, financials, plans, projections, everything. But it's good to hear from the buyer kind of the due diligence that they've done. So I think, just talking with the borrower, you kind of get a good sense of how dedicated are they to either buying a business, starting a business, things of that nature. So yeah, I love a borrower call.
Yeah, and are they going in it with eyes wide open? Have they done their due diligence?
Yeah.
That's a great question, actually.
Yeah. So yeah, that's what I ask that for pretty much every deal. It's, what's the due diligence that's been done? Because there's just so much as a lender you can do, but there's so much more that, the borrower on their end, they can do as well. So
how would you describe your credit philosophy?
Oh, okay. So I think every credit person is completely different. So everyone's going to answer differently. My philosophy, I don't think there are credit people that think credit's just kind of like a checkbox. A, B, C, D, check, check, check. All right, let's move forward. A, B, C, D, X, let's move back. I don't look at it that way. I think every deal is completely different. So I think you really have to dig deep and peel back the layers. But for me, yeah, it's not a check box situation. I think it's just more digging into the deal and seeing if it's a good fit. Some deals I might think are great. One of my underwriters might not think are, I just think it's all kind of different. I don't think you can kind of look at it as at the end of the day, we always have to make sure we're protecting the bank and we're doing, the SOP requirements. But then you kind of just have to step back and just see if it's a good fit for not only you as a lender, but the bank and also the borrower. Sometimes you get deals where we kind of advise the borrower, like, listen, we don't even we can't get this done, but this might not be something that you want to, keep moving forward with as well. So,
Interesting. So, yeah, I mean, everyone has a different way of looking at it, even from the BDO standpoint to the credit manager to the underwriter. And then the shop as a whole is kind of supposed to develop its own credit philosophy, I feel
yes.
like. So there's some sort of consistency. But how do you balance all that?
Well, so we have what we call guidelines. So it's not actual policy. So if you make an exception, you're not making a policy exception. You're just kind of making a guideline exception. So we do have kind of like guidelines written out so that the BDO, the underwriter, everyone's on kind of the same page as to what to be looking for. But then again, we call it a guideline. So because you will have deals that come in that they might not fit into those guidelines, but they are a good deal at the end of the day. So.
Okay. Now, I'm going to ask you a question,
Yes.
and I don't want to get you in trouble. And maybe the way we answer this question is,
Oh, I'm scared.
again, because a lot of BDOs watch this. And
Yes.
my question is basically, would an underwriter or should an underwriter treat a deal differently based on the BDO that submitted it? And the reason I'm asking is because, I feel like the answer is yes, because some BDOs have built their credibility. And so answer it, but don't get yourself in trouble, but make it constructive. Go.
Okay. So, every deal is different. Every BDO is different with how they submit. But I will say the BDOs that have really have the credibility are the ones that we know their deal through and through. So it's a lot of times it's easier to get behind a deal when you know that BDO has spoken with the borrower multiple times. They know every question. They know the situation. It's harder a lot of times when you get thrown a deal where I have a million questions and then the BDO is just kind of like, well, okay, let me figure this out. I'll get back to you. Or they're not going directly to the borrower. They're going to the broker to get those answers instead of just maybe going to the broker and the borrower. But so I think you can't underwrite the deal based off the BDO, but it does help a lot of times to get comfortable with the deal, knowing that BDO has done a lot of legwork on their end and that they're comfortable with it too.
Yeah, because then it's like a first screening of a
Yes.
credible person, and then it's getting to you, and then you're giving the benefit of the doubt versus if you just know the BDO doesn't know the deal and basically is mostly dealing with the broker, then you kind of have to turn into Nancy Drew and try to
Yeah.
figure out what's wrong here and just make sure that we're not missing anything.
Exactly. And I think too, the BDOs that really dig in and get to know the borrower's story ahead of time, it's a lot easier for your credit partner to then get behind that deal because they know, all right, you've done your legwork, you've done your homework, you really believe in this deal. There's got to be something there. So let me dig in deep and make sure I can believe in it too.
And again, we have BDO heavy audience here and we all want to get better and better. And so do you have any pet peeves for the BDOs that a BDO might be doing that they shouldn't be doing or anything like that?
Again, not doing the homework. I love it doesn't have to be a detailed BDO pre-screen submission, but just having enough information to be able to follow the story so I can pick it up and immediately understand, all right, what are we trying to get done here? So I do know, there are, I think, some BDOs that in general, they take their time, they prepare. When they submit a deal, they've got everything squared away. And then there's some BDOs that are just kind of throwing things in left and right, hoping it sticks. And those are the hardest deals to get to the finish line because there's a lot more questions and legwork to be done. Let me see my other pet peeve. Oh, I get that. Every credit person gets this all the time. Probably it's, oh well, every other lender would do this deal, and I'm like, please just don't say
Yes.
that.
Now we're talking.
Yes, every other lender would do this deal. I'm like, would they though? So that's probably, I would say, a pet peeve is some lenders probably would do the deal, but every other lender would not do the deal. It probably wouldn't be an SBA loan if every single lender would do the deal. So
I made a video about this actually with things BDOs say to get the deal done.
Oh yeah,
and it was
I need to watch that.
it was stuff like the mitigant is the SBA guarantee.
That's another one. That's a great one. I'm like, you can't use the SBA guarantee as the only mitigant. Unfortunately, we're all very well versed in the SBA, and we're pretty certain when we do a deal, we're going to have that guarantee on the back end, but you can't be reliant on that guarantee. You have to, as a credit person, I have to go in and I have to treat the deal thinking, there's a chance I don't have this guarantee. So when I see the mitigant as the only mitigant as the SBA guarantee, I'm like, there's got to be something else here. There has to.
Yeah. Well, I mean, as long as you do what you do, you should have a guarantee in place.
Yes,
So,
exactly.
The other one I put in there was like, oh, we have to get this deal done for the broker, or like it's a good referral source, so we got to get it done.
Yes, that's another one. It's a good
Yeah.
referral source. I'm like, I know it's a good referral source, but it might not be a good deal for us. So
Yeah. There's a lot.
yeah,
And-
I need to watch that video. Send that one to
I'll
me.
show it to you for sure. All right, now, so you're a credit manager now.
Yes.
So you have a team of underwriters that work
Yes.
with you?
We have 3 right now, a team of 3 underwriters that we're working with. Yeah.
So what made you take the leap into management?
It just kind of fell into place, I guess. I actually moved into management back in August. So yeah, it's been fun. It's a learning curve, of course, but it's been a good time so far.
Are you still underwriting deals?
Yeah, I'm still helping assist underwriting deals, which has honestly helped because we actually just got a new platform recently. So it's been nice underwriting these deals because it's hard for my underwriters to learn a new platform if I don't know it too.
Mm-hmm.
So I'm still helping underwrite. If we get backed up, I'll jump in and I'll take on some of the larger deals. But yeah, so I'm managing but still helping.
Player coach,
Yeah.
similar to me. And I'm also, a year-ish, year and a half into managing. And so managing people is, a skill set in and of itself.
Yes.
What's been the biggest challenge for you transitioning into like leading a team?
I think probably it's honestly just been kind of, I was an underwriter with my underwriters before moving into that role. So I think it was just kind of like learning, like you said, it was kind of being able to balance, still trying to underwrite, but also managing. I think
Mhm.
that's kind of just the learning curve initially, is the balancing and knowing that I'm not going to be able to underwrite at the speed I was underwriting because I'm also now managing as well. So I think
Yeah.
for a while I was like trying to keep up with, but I was being able to do this and that every single day. And now it's like, all right, I've got to learn that I can do it all, but not as quickly as I was when I was just underwriting.
It's tough. Yeah, because it's not like you have a new job. It's like you have an additional job.
Yeah, exactly.
That is tough. Yeah, I mean, I'm in a similar boat because I produce and then you manage a team. So
Yeah.
it's
Do
a
you
lot.
ever sleep?
Yeah.
Okay.
I mean, I sleep. I mean, I do have a newborn, so
So you really don't sleep.
I mean, she's pretty good,
Okay.
but there's been a couple nights, but
Yeah.
but that's what coffee.
I was going to say, that's when coffee comes in hand.
So I wanted to ask you on kind of more stepping back and talking big picture,
Yes.
market, business acquisitions. You do a lot of those.
Mhm.
I'm just gonna throw this out there, but I feel like the business acquisitions have been really going bonkers the last few years.
Yes.
Like it's been
last
very
year was
active.
wild. I mean, it
Yeah.
was every deal coming through. So we do BizAx, but we're also doing startups, refinances, real estate. But I feel like last year at BizAx, I mean, it was crazy.
Yeah.
It was nonstop.
And the last year the environment's totally shifted because the rates went up,
Mhm.
pretty much doubled within a year, and the macroeconomic environment's changing. So you're looking at deals now, and you're looking at 2020, 2021, 2022, and then 2023 year to date. So what's changed now in when we're looking at deals versus when we were looking at deals last year, and it was all about kind of COVID and pre-COVID and this and that. What's the big focus now, or how has the underwriting changed in the last few months given the new environment?
Well, I think you have to take kind of into account, one, everyone knows interest rates have risen. So a deal that was cash flowing great that we put on the books 2 years ago probably isn't cash flowing the way it was 2 years ago based off of the new interest rate and payments. But I think, too, you have to kind of dig in more now. I know everyone always says it's SBA lending, it's about the business, but it's not just about the business. I think now it's more important than ever to kind of dig more into like the industry. How does it fare, with inflation, labor shortages? Is there a way for the business to, pass that cost, increase their pricing to pass that cost on to the customer? And then I also think too, you have to look at the person behind the business. I think that right now more than ever is very important. Just, do they have the outside income? What does their PFS look like? If the business was to take a little, hit a bump in the road, are they going to be able to kind of maybe keep that business afloat for a few months for it to get, back on its feet? So I think a lot of times people just always think SBA lending, it's about the business, but I think you also have to dig in to the industry and the people behind the business, because I can't tell you, especially on the servicing side, how many deals where it's a biz act, the business looks amazing. The person that buys the business ended up not being the right fit for the business. So a great business might not continue to be great and successful without the right person behind it.
Well, that's the big risk of the business acquisition.
Yes.
That's why a change of ownership's always been on the spectrum of, deals to finance. It's to me, it's just one notch before startup.
That's why you still got to get projections.
Exactly. And the SBA and the industry, I feel like, and I don't know if this is right or wrong, but I feel like it's become so accessible to get a loan to buy a business with an SBA loan, because first of all, I don't know if you remember this, but I think it changed around 2015, but the max financing used to be 75% on large Goodwill, and Goodwill 500K or more. So not that large.
Yeah, I was going to say that's not too big.
Now you can get in with 5% with a standby seller note.
Yep.
And you don't always need direct industry experience. You can be corporate America coming in, putting down 5%, buying a business. Has it become too accessible?
Yeah. No, I agree. I think you made a good point. I think there's some industries where someone that coming in from like a corporate job might be a great fit to run a business of that caliber. But I think there's certain industries where you really do need that direct industry experience. And I think people forget that you hear the word a lot. Well, they have transferable experience. And I'm like, but do they have the direct industry experience? So I think that's something you really have to dig into. And that's a question to ask the borrowers. Okay, one, why do you want to buy this business, or why do you want to start this type of business? And two, what's your plan for it? There's just so much you can say in a business plan, but there's so much more you can learn from just having those conversations.
What are some of those industries? I say I agree. Restaurants for me, I always require direct industry experience,
because I think a lot of people just, and I used to say back in the day, I wanted to own like a restaurant or bar. I would probably not be a good restaurant or bar owner, just thinking back on it. I think so. Yeah, I think there's certain restaurant bars. I think you really do need that direct industry experience. I think construction, electrical, plumbing,
trades.
Yeah, I think that's a big one too, is because of the licensing as well. And I mean, corporate America, if you don't, you probably have someone coming to fix your AC, but have you gotten your hands dirty to actually know how that's going to work? So I think construction right now is kind of a hot topic just in general with the economy. But I would say bars, restaurants, contractors, well, of course, professionals. You need if you're gonna start your own veterinarian clinic, I'd like to see you be a veterinarian. So
okay. And so industry is important. And then also like you were saying, like what we're looking at now is, I think what you're getting at in part was businesses that rely on discretionary income might be a little bit more difficult right now, right? Because inflation.
Costs have just gone up. And I've seen it, just at like the grocery store. So it used to always be like, oh, it's so much cheaper to go to the grocery store, buy your groceries, cook at home. Nowadays, sometimes it might just be cheaper to honestly go get fast casual somewhere.
That's not wrong. I mean, eggs are expensive.
Eggs are expensive.
Can't afford eggs. Got to close some more loans. One other thing that I've been thinking a little bit more about is just like you said, the person buying the business. Yes, experience. Yes, PFS, but character and the resilience.
Yes.
That to me is so important, and I'm trying to figure out how to underwrite that, because
that's
like
hard. Character is hard because people can fake their character. I mean, you can try to fake your way through it. I think I will say too, on the servicing end, you have a deal that goes bad and you'll see someone they will do whatever they can to try to keep it afloat.
Right.
Liquidate their retirement. They'll
Right.
go get a second job to try to keep making payments. They're doing whatever they
Exactly.
can. And then you'll have someone where you're looking at their PFS and you're like, you've got a great amount of retirement. You could, take some of that, help, keep your business going. And they're just kind of like, oh, I don't want to touch that. Character is hard to underwrite to. I will say, um, what I, what, the SBA doesn't require if it's 25% or less to take someone's, house or real estate assets, but the borrowers that are willing to still pledge them, I think shows something because that to me that shows a lot of dedication.
Right. Yeah, I think that's actually interesting because it's almost like if somebody comes to you for a deferment, something happened in the business and I need a deferment or whatever, they have the means personally. It seems like the first thing they are doing is telling the bank they need help.
Mhm.
It's almost like they forgot the promissory note and the whole idea of
Everything behind it,
paying
yes.
it back and being on time. It's just so nonchalant these days. I don't even know if maybe PPP and forgiveness had anything to do with that,
Yeah.
and student loan forgiveness and all like this. But yeah, I mean, what do you do when a borrower comes to you and you're managing a portfolio and they're just like, yeah, I have all this money, but I want you to pretty much help me. Is that a character issue?
I think so because I think that you need to, as a small business owner, you want to do whatever you can to keep your business afloat by any means. But also, it's great to you ask for help. I think asking for help is a good thing because you're letting the bank know in advance you need help. But what gets hard with that is then we'll ask for financials. You start digging in the financials and you're like, but your business is doing great. Why do you need this help? And it might be they've stripped a lot of the cash out of the business for personal use. And you're kind of like, so I have seen that before where there are, there are two types of business owners. There's ones that will do whatever they can. They are putting everything on the line, taking extra jobs, liquidating retirement, doing whatever they can to keep that business going during hard times. And then there's some people that business is doing great, but they're just stripping of cash.
Do you think more business owners should know about these things? It's one of those things where it's like if you have a deal go bad, no one wants to talk about it. No one wants to put it out there in the market if you're the lender or if you're the person in the seat. So it's like you hear all this success about you can become rich owning your own
Yeah.
business and all like that, but then you don't
You
see
don't
a
hear
lot of
about the failures and how hard it can be, and what you're putting on the line. I mean, to get an SBA loan, it's. I mean, I think it's awesome for people that do buy businesses and start businesses because you're risking it all. I mean, at the end of the day, we might be taking, a lien on your lien on your house. You're liquidating everything to put down the down payment to start your business, not knowing what it could be in a few years. So I think business ownership is awesome. I think it's so risky, but I think too it's so rewarding. But I think a lot of times people don't talk about how risky it can
Yeah,
be.
exactly. And I think that the um existing businesses that want to borrow money for that reason, they are in it, they know the game, they understand it,
I
and
love an expansion deal. I love
yeah,
seeing expansions. Yes,
yeah.
they're great.
So on the expansion side, what are we talking, like additional locations or just like working capital?
Yeah, working capital, additional locations, a business buying another business is always
Oh
fun to
yeah,
see.
right.
I think that's those are my favorite is you'll see a very successful business and then they're looking to buy another successful business or they might come to you looking to buy another business. The business they're buying isn't quite successful yet, but in the end you're like you've got the right person behind it. They've done this with one business. The business that they're buying might not look so great right now, but we've got the right buyer for it.
It's
So,
like the opposite of business acquisition lending. It's like you're betting on the person,
yeah.
whereas in the business acquisition, you're betting on the business because that's where all the strength is.
Yeah.
What about startups? Are we doing startups?
Oh yeah, we do startups. We're seeing more of them. Last year was the year of BizX. But this year I think as people have talked about, I think with BizX right now, some sellers they're not willing to go down on the business purchase price. But based off of how high interest rates are. Some businesses aren't going to be able to cash flow at that price. So I think we're seeing now more startups coming back through.
That makes
Last year, we
sense.
were seeing less startups, more biz acts. Now it's kind of trending to kind of even out right now this year.
Would it be a startup, like an independent startup or like a franchise?
See them all. Independent startups, they're hard. They're hard. And I always tell the BDO, if you're going to bring in a startup, really work with your borrower, coach them, let them know how important a business plan and projections are and the assumptions behind the projections. Because, I mean, an independent startup, it's very, very, very risky because all we're going based off of our projections. So I want to be comfortable with how did you come up with those projections?
Well, that's the key. And with the franchise stuff, I don't do a lot of it, but I was
Mhm.
talking to someone last night and we were just talking about how, these franchise models have been created and then they go out and sell the franchise model. And, meanwhile, in the last, year, the rates have doubled and cost to build it.
Yeah, leaseholds have really escalated.
So yeah, so even with that, if you have to build something out, the ROI is shrinking there as it
Mhm.
is with the BizAc. And I would think that's even harder because yeah, you can raise your prices as a franchisor, but it's not going to offset a 50% increase in construction costs
Yes.
and a 30% increase in your loan payment. You need more equity really to
And that's
make
the
that
thing
work.
too. You think back on, especially with franchises, I think it was mentioned, yesterday, there's, some franchise models, let's say for the past like 5 years, it's $500,000 to start, that franchise, get everything up and running. Well, now with leasehold cost, it might be now 800,000 to get that up and running. And does that concept truly support a loan amount of that size? So that's something I've seen a lot more recently, franchises that it's just some of them are more difficult to get done right now just because of how expensive the costs are.
Well, I want to switch gears and wrap it up here. The last thing I wanted to talk to you about was the interactions between underwriting and closing,
Yes.
right? Because I always talk about sales and underwriting and that whole part, and I talk about closing separately. The part I don't see as a BDO is the interactions as much between the underwriter and the closer.
Okay.
The change memos, for example.
Yes. Gosh, gotta love
Are
those.
underwriters having to stay in the deal the whole way through closing?
We're pretty, I would say, at least at our shop, we're really active throughout closing just because rarely do you have a deal where there's not a change in terms. It's going to happen. Things change when they get into closing. Things are discovered that we didn't know, during the underwriting process. But yeah, we stay pretty actively involved. We have, I'm talking with our closers daily. Our closing manager, I'm talking with daily. We try to I always try to let my underwriters know that there's always a sense of urgency, especially when the deal moves into credit. That borrower wanted their deal closed 3 weeks ago. Then when it moves into closing, they're ready to close it tomorrow. And so the closers, I think, have a lot of pressure put on them because of, deadlines. The borrower set a deadline. The bank set a deadline. The broker has a deadline in mind. The seller has a deadline. The BDO. So it's, I always tell the underwriter, if the closer reaches out to you, put that active deal on hold and get to your deal in closing because those are deals we've already approved. We want to see those get to the finish line. So I think there always has to be that from a credit person, that sense of urgency because we know the closer is getting asked a million times, when is my deal closing? When is my deal closing? So if you have a deal in closing that has some credit things pop up, jump on it as quick as possible.
Well, I love that, but I also want to push back on that a little bit. Why would everyone have a different idea of when we're closing? Like, couldn't somebody just set the expectation that's a realistic?
We said it, but I think a lot of times it's things delay a closing that are unexpected. A business valuation comes in lower than what we anticipate. You've got to go back. The borrower's got to go back with the seller, try to maybe renegotiate that down, hold a larger seller note. Things I think, just end up. We always try to set a good closing date, but so many things just pop up that I think sometimes you got to move on.
Keep resetting, and then
Yeah.
the deal fatigue starts setting in.
Yeah.
The sellers want to close, and sometimes the brokers also, if it's a business acquisition, are the ones managing that with the seller,
Mhm.
and it's really on them how they want to manage it.
Yeah.
Because they may not. If I told somebody, hey, we're not closing for 6 weeks, the broker may not want to deliver that message, and he might just want to say we're closing in 2 weeks.
And
then
it's
when
like,
2 weeks
okay,
is
we
up,
haven't even ordered third-party reports. Like, we got to
Yeah.
get on that.
but that's part of what creates kind of that tension towards the end. And the part I don't like about that is they still have to transition the business with the seller.
Yeah.
That's the part that's tricky because they're so key to that transition period. And if they're like upset, although I will say it seems to switch after closing.
Yeah.
Now
Well, they got paid.
So you're interacting with the closers regularly throughout the process.
Yes.
And so the underwriters are having to basically move back and forth.
Our closers are really good about kind of running with it. But when a credit issue pops up, they're immediately reaching out to credit. Hey, this has just popped up. Maybe we need to increase the loan. Maybe we need.
Yeah. So you got to be
the
able to multitask.
Yeah,
basically.
it's all. I would say with underwriting, you're always multitasking. You're working new deals while also managing deals that are in closing, pre-screens. You have your hands in a lot of pots.
Have you hired one yet, like an underwriter, or do you plan on it?
Right now I have not. Hopefully when things pick up, we'll be able to add to the team.
So when you do go and hire an underwriter, like, what are you going to be looking for?
So I think that's a really good question. I think everyone, underwriting credit skills, but I think credit skills can be taught. I think when you're looking for a good underwriter, you're looking for someone that's able to multitask. I think communication is key. Being able to have tough conversations and not hide behind email. Pick up the phone, have a tough conversation with the BDO, the borrower. Dig in, ask hard questions, and really someone that can find their credit voice. I always say the word credit voice, but I think
I like that.
Yeah, it's a good word. But I think credit skills can be taught. So you don't have to, I think, have just the credit background. It's the other things that kind of come about with underwriting: the communication, multitasking, having a sense of urgency. Because I think people forget that everyone's counting on us. A deal, like I said, a deal moves into credit. If we don't have a sense of urgency with that deal, there are probably 5 other lenders that are ready to jump in, take that deal, decision in a few days, move it into closing, and then we lose. So I think it's knowing that you can't just have things kind of wait around. You've got to jump in as quick as possible and try to get to the finish line.
Can I give you some of my pet peeves?
Yes.
We'll wrap this up.
Yes, let's hear it.
When an underwriter, I'm going to look directly into the camera. When an underwriter calls it the BDO's deal, it's the borrower's deal.
It's the borrower's deal. It's everyone's deal.
It's everyone's deal.
It's everyone's deal.
That's one. And then 2, when if a deal gets declined after it's been in underwriting for like 3.5 weeks or something like that.
That's fair. I can see why that can be so. That's frustrating for everyone. And
luckily, my boy Nathan hasn't done that to me. Thank you, Nathan.
Well, that's probably because you're talking with Nathan on a regular basis.
Too much, probably.
This is one of the things I think a pet peeve I have with BDOs is the ones that don't get their credit partner involved early on. So if you have a complex deal that has a lot of moving parts, don't hesitate to reach out to your credit partner. I call them credit partners instead of underwriters, ahead of time and ask those questions. Because you don't want to spend 3 weeks of your time getting a deal ready, prepped, ready for underwriting, then to find out that it can't be done. So I think some of the most successful BDOs are the ones that really, really utilize their credit partners.
Absolutely.
And I mean, I can tell that you are probably always calling Nathan. So
he's always calling me.
It's a partnership.
No, it's true. It is a partnership, and I like that. Well, there's a lot there, and I really appreciate you coming on here.
Yeah, this is fun. So much, my first time being on a podcast.
First time.
I literally was trying to figure out how to prep for this, so I Googled how does someone prep for Art of SBA Lending Ragers podcast. Nothing popped up, but I might have to start a blog and put some tips out there.
You know what? That's how this podcast was created. I typed in, how to be a better SBA BDO, and then there was nothing, and then
now look where you are.
Amazing.
Yeah, this is fun. Thanks for having me.
Thank you. All right, that's it for this week. Don't forget to subscribe to the podcast so you never miss an episode of The Art of SBA Lending. And if you have any feedback or suggestions, email me at ray@artofsba.com. Until next time, ta-ta.